Hello and welcome to the Friday edition of the Sharesify podcast. James and Steve are here as usual. How are you guys?
Very
I'm
good,
all
Ian.
right. Getting a bit warm again now, isn't it?
It is a bit warm. Time to break out those shirts, Steve. Lovely story. Before we start, what I should flag is James and I had a great conversation yesterday with Guy Anderson of Mercantile Investment Trust. This is the 140-year-old trust, which is an AIC millionaire maker. Focuses on UK mid and small cap stocks, quality growth. Great insights from Guy, weren't they, James? It's well worth a listen or a watch if you haven't seen it yet. We've only had it up on Apple, Spotify, and YouTube for a few days. Already on Apple and Spotify, we're already up with our manager pods, which have been, in terms of downloads, which have been up there for several weeks. So if you haven't seen or listened to it yet, make sure you do.
And talking actually, it's good timing because talking about the podcast, and it was a fascinating listen. I tuned into it last night, but we've been talking internally, listeners, about the podcast, and we wonder if there's scope maybe to do some sort of slightly more in-depth stuff on particular companies, either ones that have reported or ones that are going to report quite soon. Now we thought about maybe trying to interject a slightly longer segment into this current format, or whether to do a separate podcast. So let's hand it over to you. This is basically your product. Why don't you get in touch with us, editorial@sharesify.com, and tell us whether you would prefer a sort of 2-3 minute segment about a single stock in this podcast, or whether you'd tune in as well to a secondary 10-minute podcast about 2 or 3 stocks. So give us your feedback, and we'll try to incorporate that in decisions we make down the line.
Yeah, we want to hear your ideas on this, guys. So please do. Meanwhile, Steve, what's been catching your eye this week?
Well, we talked about this on Wednesday and last Friday. It's a real acceleration into big tech earnings, the real driver of markets over the last many, many years. Alphabet, we flagged up. The 2 big issues we flagged again previously are going to be cloud growth and capex, and of course they were the 2 big issues. Cloud growth, absolutely outstanding, 82%, incredible, considering it's already a $25 billion a year business part of their business empire. But capex, they're talking about spending more than $200 billion this year, and ultimately that's what made the markets a bit nervous. They want to see that capex, is it going to turn into sustainable growth, faster growth? But look at the cloud growth markets. I mean, 82%, that's a hint that it's going certainly in the right direction. So the jury's not out, not out yet, but it does seem that they're making the right kind of noises. We've had really interesting results from IBM. We've had interesting results from a whole host of different tech companies. Well worth coming to our website. We've covered many of them today. Intel was out, really interesting company. Valuation though, big issue. So loads of stuff been going on, and it's going to get really, really busy over the coming few weeks as well. And lots going on in your environments, Ian and James, as well, right?
Yeah, James, some big news today.
Yeah, big news in the investment trust sector. So not entirely unexpected given the length of the tenure, but James Henderson is to retire next summer. So, well done, James, and congrats. But the good news here is there's a smooth succession. So Laura Fole, who we know we've done on the podcast, she'll succeed James as lead manager of Law Debenture and Lowland. Laura's got a very well-established reputation. And, Law Debenture results out today just show what a good duo they've been. So outperformed the FTSE All-Share again in the first half. I think since James took over a lead manager in 2003, so he's delivered a NAV total return of 1288%. So that's comfortably more than the All-Share, more than double, in fact.
Right. And interesting, James, we of course talked to Laura Fole on the podcast a couple of months ago, I think it was. So, I mean, all the stuff she said was still relevant today as it was then. I mean, she told us nothing about what she's doing this minute. It's all about policy and strategy and so on. So definitely, listeners, go and dig out that podcast. It was fascinating, absolutely fascinating.
Yeah, and of course, Law Debenture has that unique structure, doesn't it, James?
It does. So it has this IPS business, which kind of underpins the dividends and allows the managers a bit more flexibility to go around the market cap spectrum. And of course, it's got 47 years of either maintaining or increasing the dividend. So like a real UK equity income favourite.
Yeah,
and Ian, you've been talking about property quite recently, and I know it's still very much on your mind, isn't it?
Yeah, well, I had a very interesting chat with a very senior manager of a listed property fund about SEGRO and Prologis. I won't say who it was, but SEGRO was his biggest position. He met the Prologis board, was very impressed with them. Asked them what they wanted to know about SEGRO. They said nothing at all. We know exactly what we need to know. He said, okay, so just give us your best and final offer. And he reckons that this is the board has recommended it. The put up or shut up deadline has been extended to the 12th of August. The beauty of this deal is you're going to get cash, but you're also going to get shares in Prologis, which will have a dual listing in London. This is one of the world's largest real estate investment trusts, specializes in data centers and so on.
It's listed in
It's
the
a
US,
really good
otherwise.
deal.
It's listed in the US, otherwise, Ian.
It's a US firm. Yeah, it's a US firm. It's many times bigger than SEGRO. It does raise the question, interestingly, for other property firms in the UK of how big are you to still be safe? Because SEGRO was 12 billion and they're bidding around 14 billion pounds for it. So that was an interesting one. Had a chat with John Morgan, Sindall's CEO. That business just goes from strength to strength. They've raised their medium-term targets now for construction and fit out again. And today we had DiscoverIE, which is, I never know whether it's DiscoverIE or DiscoverIE. I probably said it wrong, but cracking
I always
results.
call it
I'm a shareholder.
DiscoverIE. Yeah.
Yeah.
I mean, it's one of your favourites, isn't it? I mean, I remember writing about it about 10 years ago when they really first
Yeah.
started going on this climb up the value chain, and they've done it so exceptionally well. It's not about just pumping out commoditized components anymore. It's about bespoke components, and that's why the thrust of its story. It's been a brilliant investment over the last decade.
Well, yeah, the CEO and the CFO have been there for 15 years. They've done a fantastic job with the business. As you say, it makes customized equipment to very, very particular specifications for its clients. That means its clients are sticky, and however long that product lifetime is, they've got the contract to make it. What's good is that as well as that organic growth, they make very smart acquisitions, these guys. It had actually kind of like a lot of really interesting UK mid caps, manufacturing mid caps, fallen out of favour. But it's had 2 or 3 really positive updates this year, and we've written about it. I'm a shareholder, so I put my hand up. I'm very pleased to see the move today. What have we got next week, though, fellas?
James, go ahead.
Yeah, big week for consumer goods group. So we've got Unilever Q2 update on Tuesday. Been in the doghouse this one since they announced the food separation. One investor who didn't like it was Terry Smith. I think he sold the entire stake. So analysts are looking for an acceleration in underlying sales growth to about 4.3%. Now, it's a tough space, this, given the cost of living pressures.
Yeah.
The following day we've got Reckitt as well. So a Q1 miss the last time they reported.
There's also
really interesting to see what they do.
Procter & Gamble as well, James.
Yeah.
Procter & Gamble, right? Yeah, absolutely.
Yes,
Another one to
exactly,
keep an eye on, yeah. Pampers and Gillette, yeah, absolutely.
And of course, there's going to be loads more tech. So we've got major tech companies, Amazon will be out, Microsoft's out. There's a whole string of companies coming out. Apple is the one that really caught my eye, mainly because it's not really been part of the AI trade, and yet it's still the second biggest company. And only by a smidgen is it more than Nvidia. It's still done incredibly well, and we all know the story. It's got that walled garden approach. Is it going to drive a new round of iPhone upgrades? And what is the benefit of this new AI integration deal it's done with Alphabet and Google? So, I mean, these are going to be the issues I think investors will be looking for is, what's coming down the line. The actual results themselves, I think they're pricing in to be slightly better than expectations anyway. Those figures are unlikely to drive the share price. It's going to be about what's coming down the line, and is it going to make earnings grow faster, and are they going to be even more sustainable if they can get more sustainable?
Yeah, as you always say, Steve, it's about the outlook, not about the past. Well, the other thing we'll be looking for next week are the bank results, and rather surprisingly, I looked at Barclays, and when you consider it's probably the only UK bank with a credible Wall Street presence. It's not maybe going to go shoulder to shoulder with the Goldmans and the Morgan Stanleys and JP Morgans of the world, but it is at the table. There's no question. Yet surprisingly, the forecast for Q2, when you saw these US banks make absolutely ridiculous amounts of money, forecasts are really quite tame. So I don't know what analysts are thinking really with this one. Where they see the growth is in the US consumer business, and particularly in fee income. So I'm very curious to see what that happens there. That's on Tuesday, and then we got Lloyd's and NatWest later in the week.
That is a
So,
busy week. I mean, it really is starting to
oh,
ramp up now with the US earnings. But of course, it's the end of June. So generally, it's interim results for a lot of companies. It might be a bit early, I suppose, for many UK companies. July is normally quite quick turnaround, and the financials typically the first ones that come out with results.
yeah,
You'll probably see a longer drip feed of UK results come out over the next 4 to 6 weeks. But the US much tighter. They've got this quarterly reporting calendar, so they've got to get their numbers to the market very, very sharply. And we're going to be under pressure to try and cover as much of these companies, as many of these companies as we possibly can. Anyway, that's probably about a wrap, I suppose, for Super Friday. Thanks very much for tuning in as always. Please send us some feedback. What do you
yeah,
think of our podcast? Do you think our coverage online is right, wrong, too big, too small? Send us any feedback you like, and we'll take it all on board. Sharesify, editorial, sorry, at sharesify.com. And with that, we'll see you next week. Have a great
yeah.
weekend.
Cheers.